Thank you very much, Ruston, and good afternoon, everybody. It's really, really nice to be here. Thank you for all coming along to listen to me. It's a huge audience. I think it's a record audience for this conference, so well done to the NAPF. And I just wanted to say a few words about how I see the pensions landscape, the kind of things that I've been doing and thinking since I've arrived. Obviously, it is a great challenge for me, being me, to be in this position. And I want also, while I'm here and before I start, to thank all of you in the audience who have been so helpful to me over the years, and also so helpful to the government and to policy in general. And I hope that good relationships will continue. There's an awful lot for all of us to do. But if I start with my priorities, I guess I would simplify them as three things. First of all, communication. How can we help people understand pensions? How can we make pensions more user-friendly and explain things better? Two, simplification, which of course is all part of that. How can we simplify some of the complexities? And we're already doing quite a bit of that. And thirdly, which I'll talk more about later, timing. There is a lot to do, but you must be careful, I feel, about how much you do all at once and the timing of whatever changes we're going to make. So my first priority has to be the foundation of people's private saving decisions, the state pension. How much state pension are people going to get on which they can build for later life? And one of my major tasks, because it affects everyone, whether they are current or future pensioners, hopefully they will be part of the state pension system, is helping people understand the new state pension. We're rolling out automatic enrolment, which is the next big phase of our reform agenda. That has got to reach the small employers. We're improving financial guidance and advice and helping people to understand and engage with pensions. For me, that is really important, and of course for all of us. Ensuring that occupational workplace pension regulation is appropriate, protecting members while not choking off the industry and innovation. And ultimately, of course, getting more people saving and working in our aging population. That's the overriding goal. So let's start with this foundation stone of our pension system, which is the state pension, and which we are reforming from 2016. A single flat rate state pension, which will no longer have any earnings linking. But it will still be linked to national insurance, so that your future national insurance record will be building up just one amount of state pension, the same for everybody. But we still have to consider the past national insurance record for those who have already got one. And that has left so many misunderstandings, and indeed what I would say are myths about the new state pension, which we need to correct. And that's why I've been working on new materials for the public and for the media, new statements for the public, online explanations, blogs, pension tube videos, using clearer language, helping people understand what this state pension is all about. And we're on track for a smooth rollout in 2016. So during next year, everyone should be able to find out their starting amount for the new state pension. The new system which will crystallize what they've already built up in the past, so that as we move forward, it will be clearer once the complexity of that crystallization process is already behind us. So we're moving towards a state pension where claims on pension credit, on the means testing pension credit, which has done, I believe, a lot of damage to private pension saving incentives, especially for the mass market, will be halved straight away, and people will have an idea of what they are going to get At the moment, they don't have a clue. It's a bit of this and a bit of that, and it all depends on the earnings they earned in each year. So, of course, at the same time, as we're implementing this state pension revolution, we're also revolutionising the private pension system. And in particular, let's start with auto-enrolment, which is bringing in millions more people into pensions. And it has been a great success so far, which is really encouraging, with opt-out rates way lower than expected, around the 10% level. But we can't be complacent. Less than 5% of UK employers have actually started, and they're the bigger firms. The small ones, 1.8 million of them, are still to go. So how can we help? Well, the pensions regulator is working really hard and has done some great work on simplifying the messages so that we can help the smaller and micro businesses and the single person employer cope with the complexities of pension jargon and the rules around auto-enrolment. We've got simple steps now. We've got the steps down from 11 to 5. And we are about to launch a brand new major media and communications campaign, which I think is really exciting, and I hope that you will agree with me when you see it next week, to promote workplace pensions, encouraging people to engage with them, because that's what employers are doing. That's the norm. We want that to be the norm in this country. We want, if you like, to establish a badge of honour for all our employers, to be good employers who look after their workforce and offer a pension as part of that. But of course, this is also a big challenge for the industry itself, for all of you out there in this hall. You need to make sure that the workers who are saving in their pensions are looked after. And of course, we need suitable products for both the accumulation and the decumulation stage in this new landscape. Good value, engaging, fair products that people will want to invest in, save with, and enjoy the fruits of in later life. So we're steering a revolution in both state and private pensions. And with the Chancellor's brilliant pension freedoms and flexibility, which have got people talking about pensions and taking an interest as perhaps never before, we've got exciting times ahead. All of this, of course, has one overriding aim, which is to improve people's later life. Pensions are ultimately about people. They're not just about money. We all know that. And these reforms are really an adjustment to the changes in people's lives that have been going on for years, but they're all coming at once because we're catching up. And they can help enrich people's lives. But of course, to do this in the best way possible for the 21st century is going to mean more than just pensions. Embracing a richer later life means more than just saving more. We actually need to rethink what later life itself will look like. We have to make much more progress in overcoming age discrimination, which is still rife in people's perceptions. Because both saving more and rethinking retirement are vital as parts of the solution to a better later life. We need to help people with financial planning. Guidance and advice are all crucial to help people at the important times of their lives to make the best decisions for themselves. The PensionWise service is a brilliant start, absolutely correctly building on the pension freedoms. And they themselves, which are trusting people to make their own financial decisions with their own money, is also the right approach in my view. And we will help to equip more people to look after themselves. It doesn't happen overnight. You've got to start somewhere, but we are on the journey. The pensions industry, all of you here involved in pensions in some way, have an exciting opportunity to help all the new people coming into pensions in the new landscape. The government has already been doing huge amounts to reform pensions. But I'm not pretending everything has been done. I'm not pretending there's not more. In the past few short years, we have finally implemented reforms that are bringing pensions policy forward into the 21st century. Decades of tinkering have left us in need of a radical overhaul that we're currently going through. But I know more may need to be done. I've inherited a rather large number of initiatives that have already been started by my esteemed predecessor, who has done so much to start these reforms. But I am also conscious of the huge amount of major reforms already underway, as I've just been describing. And I've had to make some strategic and tactical decisions. These are decisions primarily about timing rather than policy itself. Of course, I'm passionate about ensuring good value pension products for consumers, and we can't compromise on that goal. And I don't intend to, but I'm also very conscious that we have to be aware of the cumulative impact of all the changes on pension schemes and on providers, and on the industry as a whole. So I've had to decide what needs to be done now to make the system work well and support and protect savers, and what perhaps can wait a little bit longer. In other words, what is the right timing of further changes? So I have been focusing on what I see as the key priority issues. And I've issued, as Ruston said, a written ministerial statement in Parliament today with some announcements. We have to protect defined benefit that we already have. Millions of people with billions of pounds need that to be looked after well. We have to develop DC in the ongoing new landscape as that rolls out. And I am, of course, interested in the vision of a middle way between defined benefit and defined contribution, and collectives or defined ambition will be a future reform, but either we're a bit too early or we're quite a lot too late. So I don't think it's a priority for now. If it had happened 10 years ago, I think we would already be underway. But even if we work full pelt from now on trying to get defined ambition and collectives in, I am told that we won't have anything in place before later in 2018. So it's not going to address some of the issues that we might have wanted to address next April, for example. And I want to thank all of you who have helped the government on the issues of defined ambition and collectives, and indeed also on the issue of automatic transfers. Because yes, we will need to address the small and stranded pots, and that issue isn't going to go away. But I think we should see how the landscape develops and what happens before we say this is the most immediate urgent priority. I would love to see a pensions dashboard. Should that be done by the industry, or should that be done by the government? What is the relative role? Let's see. I do also recognise that there are concerns about new master trusts setting up, concerns about scams, protection, quality assurance for members and for employers. And I want to make sure that schemes that are promoting themselves for auto-enrolment are well run and looking after their members properly and sustainable. So I don't think doing nothing is an option. And then, of course, we've got PensionWise, which has already helped people avoid scams, but I want it to reach more people. And it's coming over to the Department for Work and Pensions in 2016, so there is more to do. I'm also going to be launching a consultation in the autumn on simplifying the valuation for guaranteed annuity rates to clarify for providers and customers who it is who needs to take financial advice. And we'll be gathering evidence on what's happening to people overseas who might be required to take advice. And of course, the Treasury and the FCA are currently consulting on the Financial Advice and Markets Review and guidance for the wider public. So there's lots going on. There's plenty for us all to do. I am going to stick to priorities that are most urgent for now. I have made some decisions on timing, and I think this is an incredibly exciting and challenging time for pensions. I wish all of you here every success, and I hope that we are all going to enjoy helping people enjoy a richer later life. Thank you very much.